Hey guys, how's it going? How's it going? How's it going? Happy morning. This is Friday, January the 31st. So, as you guys know, we have the Fed chair meeting behind us. We also have a couple earnings actually was behind us. So, we're free and clear. No, not exactly. You also had today, some other things going on as regards to Forex Factory and the news that dropped. We'll bring that to the front of the classroom in about two shakes of a lamb's tail. But I wanted to tell you guys essentially kind of where we are, where we're going as regards to not just trading, but the overall market at large, and just what my ideas are for the overall market as well, right? If you're looking at potentially um, like making huge purchases or buying anything in the near future, I would say maybe hold off. The Fed has said increasingly that they are looking to not cut rates or limit rate cuts down to two rate cuts instead of four this year. So they're not cutting so aggressively. Also, the amount of people that I see that are doing these uh, pay off my debt challenges or get completely out of debt, those challenges are admirable. But we try to be two steps ahead over here. And one of the things I would say is once you pay off your debt, what's the objective? Like, why are you paying off your debt? Is it so you can go on vacation? Is it so you can start a business? What is the reason why you feel like you would want to pay off your debt? Because if you pay off your debt and you don't have a reason why, you're just going to get back into more debt. It's going to be really exceedingly hard to pay off that debt. And well, paying off debt is hard in the first place, but if you can have a why on why you're paying that debt off, maybe it's to start a business or put capital towards your trading, which is what I recommend, right? Why is trading the best apparatus for that? It's because of the barrier to entry. To say you own an asset in real estate, um, would you rather own a whole house, which can average anywhere from 400,000 to $200,000 in this country? Or would you like to say, hey, I could come in and build my way up buying REITs or buying dividend paying stock, right? Which can be as little as $5 to $20. Um, what I'm saying to you is the reason why trading is such an effective tool is it takes into in consideration the biggest builder of wealth, and that is the compound effect. So we're going to dive into this market here, but knowing what we know now and the compound effect, we want to be cognizant, and that's the power that we have currently, right? The market will be opening here pretty soon. We'll dive right into that, but just so you're tracking, there is your bar chart for sector rotation, and just keeping that at the front of the classroom as well. So market opens in about 8 minutes. We'll go ahead and pull up the good old handy dandy Qs, good old handy dandy SPY, let you guys know what's kind of going on there. If you watch any of our subsequent videos yesterday and today, there was a lot of to-do as regards to good news. The market did kind of push up, got a couple market watch indicators firing there. One of which was Apple. We'll go take a look at that. Apple, very, very nice push, traded above our level there. We are in Apple, massive roll here that we took in the good old Apple. So what we could do is continue to make that roll post earning. We don't want to get a vol crush anyway. So we'll come up here, take a look at our Apple trade here. It's up 60%, and we'll go ahead and roll that some more. Shout out to us there. We like Apple. It's been making us a lot of money, and we'll go ahead and just roll that up. Create roll, buy one, vert roll. We still have some juice on it, still have some time on it. So we'll take the buy. The buy here will be, what's the strike here? 247. So we'll go ahead and make that a reality. 247 and a half. Very nice. And what is that? The 50 delta. Is it? Yep, 50 delta. And then we'll make the 20 delta. We'll push it out a little bit. We'll go ahead and push it out to 280 is a sell side. 280 is a sell side. Right. Get some data still, and we'll keep the expiration the same. Okay, yeah, 21 Feb. There you go. So pulling some cash off the table there. Shout out to us. Hopefully we get filled. And then voila. So pulling some profits off the table for Apple. Hopefully this level right here holds. We'll see. Might fill us, might not. We might have to go on market because there is a gap there. It's pretty big, and we don't want to give anything back. Well, not necessarily go on market, but okay, sweet. So it did execute. Nice. Things are really volatile in the morning, and getting filled is sometimes can be a doozy. So we got filled around here. There's an A-okay with me. As long as we take some profits off the table, I'm okay with that. Put it lights. We'll put it there. Boom, boom, boom. All right. Enough for room to grow. It is at the beautiful part is at the bottom of the 2 standard deviation there. So hopefully we can see some. It find its legs, but this gap here, we just want to take some profits off the table to alleviate that gap function. Move our break. It won't necessarily be break even. We've already made considerable profits, so we'll just move our alert up. And so how do I treat this, right? Now that we've made profits to where our remember the initial trade is really kind of what we're worried about. The initial trade is been accomplished, right? This trade coming here and getting the first move pretty much pays for all the risk. This one is pretty much profit. So everything after this is also pretty much profit. It's not that's we want enough room and give our plates time, but taking a lot of cash off the table is good and equitable in this case. And so what's our new plan? Essentially to target the next level of resistance because we're up here in this zone. The next level really of resistance is like right here if you're looking on the daily chart or all-time highs. So kind of just giving a heads up. Everything else now was, when you see the next level of resistance, take some off the table and keep doing this until the trend changes. You want to stay, if you're in a trend, the biggest problem I see with most traders is if we're in a trend, you want to stay in that trend as long as possible. That trend is your friend until it's not. So once you get in a good trend, milk that trend for everything it's kind of worth here. So we're pulling up MCH. It is popped up on our ETF hot list there. We got other things we want to look at on our hot list and our market watch, but this popped. I just want to take a quick look at it. It's probably going to spool up an uptrend. 21 period moving average is up. Unbalanced volume is kind of taking up very heavily. So we don't want to be in the way of that at all. Yeah, really pushing there. Shout out to it. We're going to go to the market watch, see what triggered. I want to kind of get rid of some triggers. Maybe we can remove some of these here. TSM, BKR. Shout out to it. IBM. Quite a few things triggered. Lilly, AVGO, TEM, SMH. We can go look at a lot of these triggers. Not all of them triggered today. Some of them triggered yesterday. So I got to look at some of those. But TSM and XLF. We're going to look at XLF and TSM. We'll start there. So you got XLF, right? If you guys have been watching kind of the same thing, we kind of told you guys back here that XLF was gonna rally. We explained that in great detail. We've been watching the trade. If you watch any of my Sunday videos, you know that we talked about XLF considerably based off of what the underlying stocks inside the XLF were and the way they were spooling up to fire. So now it's kind of punched at all-time highs, and I've been noticing that some of the subsequent ETF items inside the ETF have kind of gone to the length, right? You can look at JP Morgan Chase, Morgan Stanley, Goldman Sachs. Right here's Morgan Stanley, right? Kind of pushing past all-time highs. Goldman Sachs here also in there, pushing all-time highs. Very similar setup there, all-time highs there. JP Morgan Chase. All-time highs. So these are just three of the big ones that we kind of want to bring to the front of the classroom. All-time highs really pushing through. So it just makes kind of sense that XLF is pushing. But now that they're all at all-time highs, those are just a few. There's a couple other ones that are doing that as well that we talked about. And taking a lot off the table and even taking some positions off the table. We still are in this uptrend. So it's basically a partial take off the table because again, we want to remain in the uptrend as long as possible, but getting your mind mentally prepared to buy down here, sell up here is extremely important. Okay, we got TEM. So shout out to TEM. Nice, pretty juicy rally. The 20 win peer moving average is starting to go neutral slash up. Nice setup here. If you had a buy biased, right? It doesn't necessarily, when I say buy biased, it doesn't mean our uptrend parameters as of yet, but could swing to the upside and change trend. And that's what it's currently doing right now. Probably going to get a trend change here pretty soon. So we'll be looking for a pullback on that for TEM. Let's go back to our market watch here. We got some couple things to cover. We'll go look at BKR as well, and then BKR and MDB. Start with MDB. So a little bit to similar story of what it's looking like from the last one. Now you noticed here we have our alert kind of high. We're anticipating for MDB that because of this resistance, it could go by bias. It did go uptrend, and then it has a wide berth as a regard to its rotation. So something I don't like these. I like things that kind of keep their structure a little bit, but there are opportunities here to take a play. If you see it close to this, and then you got these setup candles here, you could potentially see a trigger to the downside. So MDB, a little bit of a mixed bag. So we put an alert above and below. That the one that went below is a trigger. Remember, there's no follow through there, and so that's why we didn't necessarily take that trade. Is because it's kind of a mixed bag play. Could be one or the other. We just want to keep people informed on this one, right? We want to educate people on if thens what happens when we test the system, right? So next is a BKR. BKR is a little bit more what we like to see as of regards to keeping structure. So in BKR, we did take a play and it absolutely ripped. There was another, didn't take this one though, but we took the previous one here. Uptrend, very strong uptrend. Nice deep pullback here. Could have got in pretty sweet. We did take this one though, multiple rolls up into the push there and right before it failed, right? When you start seeing blowout candles kind of at the top here, you just got to be cognizant. What I mean by blowout candles, let's say a move already happens, right? You see start of this move starts here. Boom. Nice little start here for the move and then push. When you start getting setup candles at the top of moves or after a huge rally on moves, then it's kind of an indication that, hey, this might be over. People are stepping in a little late, increased volume. Either they're stepping in to take profits or stepping in to get long really late, thinking that the trend can continue forever. So once they kind of get washed, right, these guys get washed, it does end up falling through. Very, very similar like to a sell bias situation. But the reality is that you want to be a buyer close to the moving average and a seller away from the moving average. I know it seems oversimplifying, but a lot of the best things in life are very simple. We like that trade also. It was a crushing play as regards to the first time we rolled was like 3 ACR and then we just went boom and it went straight there like within 1 week. So absolutely love plays like that. Moving on, we'll continue with our market watch breakdown here. You've got IBM and Now, as well as Google. So let's take a look at IBM. So IBM, massive push. We losses are lessons here. We did take a loss here, but it did end up coming into a very profitable play, or would have been a very profitable play here on IBM. It happens. Like that's another thing too, guys. You see a lot of amazing traders. They have days like this. Like, I really wish that the industry would fine tune people to that. A lot of good traders, their win rates might be 59%, right? But their losses on those the other side of that equation, they're very, very small. Um, and that's the beautiful thing about trading. But a lot of times we only really focus on our wins and we don't really kind of hone in on the losses. And the losses are where the biggest lessons are. So when you look at this chart and you say that you're looking at the breakdown, you get a nice setup candle, you get a buy, right? Maybe if you get a double green buy, you're like, okay, that could be a new setup I can add to my playlist. If I'm in a moving average cloud situation and I get a double green here, right? Positive moving cloud stacked tightly close to the moving averages, right? I can take this as a bye-bye, right? This could be a buy, stop out at the low here, right? Very tight, juicy candles there in this area, and then it explodes, right? So you're seeing the squeeze culminate. There's a squeeze down here. We had a squeeze indicator because we like to compare versus a squeeze, but really the squeeze starts building momentum here, 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 and here, right? It starts building this momentum on the tail end part of the squeeze. So the reason why we like our setup because it kind of we avoid um timing issues with the squeeze. I've seen squeezes go for 30 days. Like, oh my goodness, the squeeze is going on for the whole month, right? When is it going to fire? Well, when you start seeing our setup candles come in, it could be an indication that it can fire, right? It can fire. Let's go back to the market watch here. So we were looking at IBM. Let's look at DLR or yeah, IBM DLR, and now got DLR pulled up here. Like what I'm seeing here. So you got DLR, Digital Realty Trust. Nice gap there, looking to fill the gap. If we want to go ahead and take a position before earnings, we could do that. Sellers kind of stepped in late, did a couple days. So let's go ahead and see if we can get, as regards to DLR, we'll see if we can get this for 25, 28 days. That works. We'll take a vertical buy on the 45 is good enough. And then a sell, right? Essentially, that's where we're at. We'll just take one. It'll be if we take two, it'll be over what I want to risk for this step in the journey there. So we'll go ahead and take this, execute that trade there. Hopefully, it'll fill sometime sooner than later. We'll let that go ahead and do its thing. It did trigger up here, so it wasn't like I saw it flash over. That's why we're kind of going through this, but we'll see. See if we get filled. But while we're waiting for it to get filled, it'll tell us if we get filled or not. Might pull back. Ooh, limits all the way down there, huh? We'll wait for it to come down and pick us up. I don't think it might come back to VWAP, but it might just gap and go. So Tesla. Set up on Tesla. Ooh, interesting. Very similar story with Tesla, right? Love it. Post earnings play, wave play. We'll take this all day. Post earnings, post wave. We'll take this all day. Also, the Fed chair meetings in the rear view. We did, so we got to go back to DLR there, and then we'll take this Tesla play here. You got the 52. Actually, instead of the 52, we'll do the 49. It's closer. Take the 49, and then we'll do the 20 delta. 1,500. It's a little more than what I'm willing to pay. But I just don't want to pay that. What do we need? Yeah, that's more like it. Maybe one more strike. We'll do the 435 as a sell. We'll do the 435. We'll do the 435. I'm just literally just making this thing cheaper, honestly. So yeah, the cost. We have the 435. Yeah, I mean it's not right there. Let's do one more. Sorry, just want to make it cheap. Want to make this puppy cheaper. That's what it boils down to. There we go. That's one more I'm talking about. You got the 415 and 425. Should be good. Probably gonna blow past that. And that Tesla one got filled almost immediately. Immediatoire. All right, so there we go. Got filled on the pullback, slight pullback. It's probably going to pull back a little bit more, putting money on the table there for Tesla and DLR post earnings. We'll take that, put that there. And we already kind of know what our risks are. That's why I kind of defined our risk on the buy. We like these post earning plays. Nice squeeze setup here with the setup candle. We want to go ahead and put an alert to if it goes below the low of that candle as a professional, go ahead and let it go. Also, we'll take the DLR trade, kind of define our risk here also for you guys there. So put our, I'm gonna see, it was basically like a couple minutes ago. Boom, boom. Could this thing keep going? Maybe. I think it's gonna pull back though. But if you guys know me, you know I'm more worried at the longer time frame. I'm not fighting for a nickel here. If I had more time to, like, if I was doing this all day, I would want to fight for a nickel. But you guys have me for essentially like the first hour of the day, first couple hours of the day, and so fighting for a nickel is kind of rough. We're not gonna fight for a nickel if we don't have a lot of time. We're gonna get in where we fit in and make it a reality. I gotta plug in this so-called computer here. Got a couple monitors sitting right here. Yeah. Cool. Is it charging? Yep, it is. Okay, cool. Yeah, I gotta keep the computer juiced up, right? Take care of the money maker, right? So essentially we've got DLR. Yeah, it's gonna pull back probably to view up if we're sitting here all day. We don't know if it's gonna pull back in the first hour or first 30 minutes. What it's pulling back though. So shout out to it. But we've got it. So what's our risk now? We got to respect pretty much the setup at least the setup candle and the buyers in the setup candle. So there you go. There's your risk. It is defined. There you go. So we like this trade though. We like the fact that you have a double setup candle here with its configuration currently hammered out and momentum shifting. And also when you look at the unbalanced volume, it likes to come down here, respect that level, and then we'll see if volume picks up the other direction. We'll just have to see. But yeah, kind of do the same thing here. The volume likes to push down to that level, and then sellers kind of get exhausted, and then buying starts to step in. So we'll see if that plays out. And then yeah, nice gap and go here with the uptrend. At least, like, the way you could also think about this is your first sign of danger is a reversion to the mean. So we'll put an alert here as a first sign of danger. I kind of like to put where the 8-period moving average will be is halfway between current price action and the 8-period moving average. It's typically the best rule if you're looking to anticipate into the future when those two will meet. That's not a hard rule. That's just kind of what I decide, right? What I think, what I've seen in the past typically works. Right. We'll go back to good old Tesla. So for a good old Tesla, first sign of danger is this rotational high there. Definitely going to be the first sign of danger for that for sure. So we'll be looking to maybe take some off the table. Not advised, but this is what we want to do because it's a 1-to-1. The next sign of danger is this price level. We'll go ahead and frame the trade there. And the trade is now framed. So you guys see our risk, you guys see our reward, right? Stops is at 384.25. First roll 438.62, and then second roll would be a 454.72 for good old Tesla, right? Earnings came back pretty good, and seeing the setup candle post earnings, we like stuff like that. That is pretty powerful stuff. Nice squeeze here, unbalanced volume, in a good position. 8-period moving average is the launching board. Now, ideally, your ideal launching board is something in tight squeeze, tight moving averages advancing. So this is advancing. Yeah, it went sideways for a little bit, but the moving averages between these two are very wide. So we like it more when it's they're tighter. It just makes for a better springboard. And with good news or catalyst, it tends to explode in one direction before the next earnings, as you can see, right? This worked out really good, exploded in one direction with the new earnings, and then wham, right? So shout out to Tesla. We'll continue going down the market watch, but you saw us just execute a couple trades there. You got AVGO on the board. Look at that. We do have AVGO already, so it's good to kind of get an update there. See our exposure there. Very similar setup. Actually, the setup for AVGO triggered kind of very similar story to Tesla. Now the difference is I'm banking on the catalyst between the new administration rolling in and one of the new government um, federal government organizations, Doge. Its leader is Elon Musk. So if you're talking about making government efficiency, I don't think he would, make efficiency against his own interests. I don't believe that. But if he can help people and still help his own interests, I believe that's the case. AVGO Broadcom is a little different. So the space was hit pretty hard due to DeepSync, which is a new open, like the open AI killer, some people are calling it. It's a new AI learning model that was manufactured at a percentage of the cost and with less resources. So we're really pushing out that efficiency curve out there for what we believe is attainable. Right, 300 million to develop, and it's kind of on par with OpenAI, and so that's spurred on a whole new arms race. So you gotta kind of watch. We can kind of watch how that plays out. But yeah, AVGO. I'm a little hesitant for AVGO Nvidia plays. I want to see some catalysts. I want to see some good news. This setup normally is something that we would love to take. You get multiple stacking setup candles right here after a major gap. It might end up be to our undoing that it actually runs, but we'll just have to see. We'll just have to see. But right now, I'd rather just wait and see than kind of front the gun, kind of. So that is AVGO. We got E Lily to kind of keep that on there. TEM, kind of keep that on there. Lily, SMH might be something we can look at. And you already looked at TSM and JD. Let's go look at SMH and JD. There we go. Take a look at some SMH. Rotational play. Look at that. We don't take a lot of rotational plays. We kind of prioritize uptrends and downtrends. But here's a rotational play. Did trigger as of yesterday, and is potentially could be pushing up to the highs here. First sign of danger would be really closing the gap that I see. We like this stuff like this to close the gap. That would be pretty sweet for SMH. Also hit pretty hard with the deep sync news, obviously. So a little hesitant there to take that play. Could have happened, yes, but we'll just have to wait and see for that. JD, good old JD. Now going to the other side of the pond, JD.com. We did take some profits off the first sign of danger with JD. Kind of bought a little late in this push, right? If you could see that, yeah, it pulled back soon uptrend, right? This push is set up here, and then I think it didn't even peekaboo, so we didn't get the trigger. That's why, and then it gapped. So you can consider it as a gap and go, which it does go. It doesn't. When I mean gap and go, it gaps and it doesn't fill the gap. So it just gaps and then goes where it's going. Pretty powerful indicator of strength, right? Gap and go, no coming down to fill that gap. So when we saw this opportunity, we're like, moving averages is still kind of tight, and we like how this thing really rips, pulls back. So it's in the nature of the stock to kind of rip to pull back. Doesn't mean it has to do in the future, but certain stocks have certain characteristics, right? The same people might come to the same stock and buy it in the quantities and sell in the quantities that the chart says they're accustomed to. So we just kind of zoom in here. Neutral, unbalanced. So anybody who says, "Oh, unbalanced volume just tracks price," neutral, very, very neutral through here, where price is going haywire, right? When I say haywire, 32 up to 42. You got $10 moves, but unbalanced volume is kind of steady, right? Kind of boop, 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 just up and down, just nice and registered, I should say. And then when you look compared to the rally, obviously unbalanced volume is going to be screaming to the upside, right? You have this push, and we just took it off at the first sign of danger, kind of move our stop. So we're trading this a little tight, but we see these stacked setup candles and they get washed. We take the buy as people unwind those positions there, and then boom, there's your kind of take profit. I think we're still in the uptrend. Like for like one contract, we closed out like two of them, so we liquidated a lot of our position there. So that's pretty much, I think, everything noteworthy on the market watch. Got some other stuff on here is canceled. Yeah, so we're good. There's your market watch, guys. Not too crazy. Costs. We could bring up costs to the front of the classroom really quick. We'll bring up costs to the front of the classroom. Costco, good old Costco. Costco has been something that is pretty nice. Now, if you have Costco in your portfolio, shout out to you, especially if you got it back here, which is probably where you should have got it in the trend change. Because why? There's a triangle there. So if you're a watcher of Costco for any length of time, seeing this, you should have been licking your chops. If it fires to the upside, you're going to get super excited, and then you have this huge rally. As people consider inflation, buying in bulk to get what you need for discounts, $60 is a small price to pay for the year to go ahead and get access to thousands of dollars in savings. As people are looking at the cost of commissary, looking at the cost of like chicken, eggs, they're like, hey, if I buy in bulk, I get what I need, and it's per pound cheaper. So they're making Costco is a smart financial decision, in my opinion, to offset some of the costs, right? We don't have a big Costco in Pacific Northwest, at least not that I've seen. They're not everywhere like they are in the South, right? Like where I come from, down in the South, there's a lot of Costco's. So Costco wholesalers are awesome because you can buy in bulk, you buy their gas at a discounted rate. It's a really good time. So let's go take a look back at some of the major indices we kind of want to bring to the front of the classroom: the Russell, the SPY, and the QQQ. Right, Russell, SPY, QQQ as some of the big boys. So we're going to bring those up. Oh, we're bringing the Dow up too. Might as well. Tag. Don't forget the Dow. Dow setup candle here got triggered. Boom. Absolute launch there for the Dow. So this is kind of why we believe our setup works so crisp. Nice uptrend. Even if you take this to the upside, we tell you the play's going to work out 2 days to 3 weeks, right? One, there's your trigger. 1, 2, there's your first sign of danger. So already off the rip, when I say 2 days, there's your 2-day play. You could be a swing trader for 2 days or a swing trader for 3 weeks. There's some occasions where, the play just works out a little too well, and you might have to pull some off the table in 1 day. Hence, Dominion, right? That happened to us where we pulled a lot off the table as it went down to the first sign of danger within 1 day, then rallied and is here. So smart for us for pulling that play off. We didn't want to take any losses or anything like that, but it dropped. And this is where your discretion of not being greedy kind of comes into play. You're like, oh man, this first day absolutely ripped to the downside. Is that sustainable? Well, it's not, right? So we took off a lot of our position here, and then we took off the rest of it at kind of break even. In that way, it was a positive experience all the way around. Could see this swing to the upside. But going back to the YM, right? The Dow showed a setup candle. We like these setup candles on the overall market. It's kind of hard to rig a market that it's kind of hard to rig or bully a whole market. It's kind of hard to bully the whole market. What do I mean by that? There is people do know that there is some manipulation in the market, spoof orders, and things of that nature. People hunt stops. They do hunt your stops. And the cool part is, but it's kind of hard to do that in the market, in the overall benchmark of the market. What do I mean by that? It's kind of hard to hunt people's stops over the whole Nasdaq or over the whole Dow, right? It's a little easier to do that in a limited frame, right? Now, if everyone's rowing in the same direction, like all the algos are kind of programmed the same thing, then yeah, there is going to be a little bit of hunting of stops, right? But as you can see here, nice juicy setup. Can you take the buy to bar professional? Where does that put you? Uh, Kind of right there, right? If I look to the left and I'm looking to the next bar down for a good setup, there you go. There's your bar right there. You can say, hey, okay, cool, makes sense. If that bar breaks or we go below, for those who have a little higher risk tolerance, 16, 41, 41K, 672. If it breaks below that major support, then I'll let it go, right? But this doesn't do that. And then boom, fires off. Very, very nasty work there. Also, this kind of fires off 2 days to the first sign of you know, decision making location. So there's that. You also get this one and really ripping to the upside. Your first decision making is here. You probably take the roll, and then as it continues, your next sign of danger is pretty much the highs. I mean, there's pretty much no. You could say here is your next sign of danger at the fair value level. Kind of halfway between these rotations. I just call it fair value. So fair value level, it could be a sign of danger, but then you just keep peeling off at the top there. As state of decay kind of creeps in. That's the why I'm looking back. It's at all-time high, so that's good. Shout out to it. People keep saying recession, pullback, pullback. The reality is, you know, what is a chart kind of telling you? You know, is there a recession? Is there a pullback? What people are missing, yes, there's recession in the overall market, but there's not a recession in assets. That's the difference. You saw it in the housing prices. You saw it in the food costs. Asset prices, things are becoming more expensive. So yes, there's a recession. When you say recession, to me, all it means is that the job and labor market are being affected, um, and to where unemployment. When you say recession, we're talking about unemployment numbers, and we're talking about job numbers, like jobs, unemployment, and high turnover rates, stuff like that, right? So really the worry isn't necessarily the asset prices. The prices are inflationary during the recession, and even in depression, asset prices are inflationary. They go up during those time periods. So if you already own the asset is going up in value because the cost of goods are going up in value. The more you charge for the cost of goods is going up in value. That's why there's accusations of price gouging and corporations charging more for things, because they can blame it on inflation and increase their margins without people looking at them crazy, right? But then when you like, yo, this is, is this really how much it went up? They're like, yeah, sure. The reality is asset prices are inflationary during recessions. Historically, not everything. Some markets, if your market is on the chopping block, then yeah, it's different. Your market's going to be on the chopping block. But if you are in an asset class that's not on the chopping block, those prices are going to go up, right? For sure. So take a look at the cues here. You've got this nice juicy setup candle ran for 2 days, 1, 2, couple more days in limbo land there, before it did end up dropping. Nice little gap there. Now what I'm seeing, yes, you get this green setup candle. We like our red setup candles as positions to like for it to unwind there. So it's something to watch next 2 days. So I'm looking at this candle too. Next 2 days, boom, fired off. But we put the channel there to kind of show that it's outside of normal rotation. It's just kind of doing its thing there. That's the cues. We can look at ES as well. Good old ES. Love ES. Shout out to ES. Nice little trigger here. So if we're talking about, this was our butterfly trade that worked out pretty good. Now, if you look at ES within the next 1, 2, 3, 4 days, right? The ES did scream to the upside. So do I anticipate bullish days ahead? I kind of do, at least for the next couple of days. Maybe Monday it gets back to highs. We might not see more than that. Might be a good opportunity to go ahead and say, well, it is at high. So if I do have positions on in the ES, then I can go ahead and take those positions off or make a decision, roll it, do whatever I need to do. Because why? Uh, well, good old market wisdom says buy low, sell high. Why are we getting the? I don't know why we're getting the. Okay, there. You know what? We just failed that miserably. That was just a washing fail. Anyways, why would we take profits at all-time highs? It's because, hey, that's buy low, sell high. Like, keeping these simple, people don't just say that for a reason. But too often we lose the forest through the trees with all the trainings and thinking, oh, you're gonna beat the market with this guru strategy. Start with what works really well. Buy low, sell high. Buy with the moving averages are tight in an uptrend. Start there. Like, if you could just pull that part off, I'm telling you, your life might change for the better. Seriously, seriously, seriously. Or at least you'll see some results. So I would say focus on the fundamentals. Focus on what it takes necessarily to what are the fundamentals? What is my craft? Why is the weekly better than the monthly? Why is the weekly better than the daily? Why is the daily better than the 5 minute or the 2 minute? Right? What is the strengths and what is the weaknesses? Once you understand the strengths and weaknesses of the opponent, right, the market, and you understand your own emotional misgivings, then there's not really much else to really figure out. That's the 90% of it. Because this trading thing, if you see, we come in, we have a few indicators on here. Um, the the learning, if you can count to two, you can trade, right? You got buy, you got sell button, two moving averages, right? I got two colors, red and green. Um, you got two contracts, a call and a put contract. If you can count to two, you can trade. You got a support resistance. You got a couple trends. You got up trend, downtrend, and accumulation distribution. If you can count to two, you'll be fine, man. Like I really, what people are saying is if they say trading is risky, my response to them is, well, you're risky then. You're a risky person. You are undisciplined, right? You have undisciplined. You have to follow the edge that's laid out. Trading is not risky. Well, it is risky. Take that back. Trading is inherently risky. There's an inherent risk involved with anything you do. But the probabilities in trading, the probabilities in anything, once you understand those and you can manage those, trading is an amazing way to earn a living, earn income, grow a portfolio very quickly. I'm telling you. And you gotta get to the point where you can bet on yourself. You gotta get to the point where you can say, if I was an employee in this trading business, would I hire me? If I was an employee in my own trading business and I was evaluating my performance, would I as a firm want to hire a guy like me? And if the answer to that is no, then you already know what you got to do. What would it take for a firm to want to hire you? What is that drive where you'd be like, to even a limited degree, yeah, like I would want to hire that guy. He's pretty cool, right? He crushes it. He taps in every day. He kind of knows his stuff there. So, was that Apple that was pulled up? Sweet. Is it still pushing? Could tap it in, right? No, Apple's dropping. So yeah, good thing we did take that roll with Apple, man. It got hit. I thought it was gonna bounce here. No bounce. No bouncy on Apple. No bouncy at all. No bouncy at all. We'll go to JD, see what it's doing. Also, kind of failing through a good roll there. So shout out to us for pulling profits off the table there. What else we got? That's all I can think of right now. Off the top of my head, we got some. Let's go look at some of our CCI. Let's go look at CCI there. See how it's doing. I think it's taking some heat. Good old CCI. Yeah, it's taking some heat there. Nice push. It's kind of getting into middle wash territory, so we want to see if it'll make this way to the downside. If it doesn't, here's your stop out there for good old CCI. Taking not heat on the play. We're actually in profit currently, but we wanted to kind of push to the downside. That'd be really nice. Probably are taking some heat on this guy. Yeah. With the markets pushing, high tide raises all boats. So real estate, we definitely taking some heat on this one for sure. Stop out still there. But yeah, we're looking for it to get down to the first sign of resistance. Kind of did, but the risk to reward was too tight. Probably should have took that roll. Ugh. Hindsight is 2020, right? Probably should have took that roll down there, and then but we put it down here on that ledge there. But yeah, that risk to reward was just 1-to-1, and we won to 1.5-to-1. Right? It is what it is. Okay, E. We can go look at that. One of the ones we did, I think, close out. Yeah, shout out the fact that we did, right? And it's kind of really why protecting yourself after you take some profits. Sometimes base hits doubles are okay, right? Let's say this went up and it kept going and we rolled it. We're prepared for that. As it pulled back, what do? Get out for break even. Get out for break even and you avoid all that. Massive setup candles to the downside. Nice break there. So we get to walk this down, but it is starting to really push to the downside there. So with volume too. So just gotta be careful. But we got out of the way of that. So all this, we were there for the ride up, and then once that ride stopped, we got off. You don't try to just stay on the ride and be like, oh, I think. When you start saying I think, I feel, I hope, man, that's hope. That's not the strategy. Use your rules as your guardrails there. IBM. I think we already talked about IBM. We'll do the Mara. A-R-A. Yeah, this one, good lesson here for Mara. Did get a good juicy stop out there, but it was a good trade because everything went well other than the play going in our direction, right? Did we follow our rules? How do I calculate a well trade? Did we follow our rules? Did we get executions at the right spots? The answer to that overwhelmingly is yes, right? You see the red candle here, you get the peekaboo, we take the second one, right? And then it just comes down and it just stops us out. It doesn't really build any traction, it's above this, it breaks above this price level. Setup candle follows the rules, moving averages are green, they're tight, doesn't break out. Wait for the next one. So did we follow our rules to the T? Yeah, that's why it's a good trade. It's a good trade because we followed our rules, not because we got profit or add to our win ratio. No. Did you follow your rules? Do your rules have edge? Did you follow your rules that have edge? If that's the case, yes. That's a good trade. That's why people lose in this business, is because of stuff like this. Instead of saying that this is a good trade, I followed my rules, they're going to say, oh, that was a bad trade because what? I didn't make any profit? No, you followed your rules. You executed your playbook. And then if your playbook didn't work out in this instance, that's the cost of doing business. It's the cost of doing business. ET, I think did we cover ETN? I think we did. We'll cover it again for good measure. These are just some of the recaps we got in here. Yeah, so ETN, nice push, roll here, and then as it broke well below gap, it's nothing you can do about the gap. We went on and closed the rest of the position. It is setting up for a nice juicy push though. Still, now there is something different going on too. You're getting a change of trend, so you got to watch that change of trend for potential shift. For a potential opportunity shift to buy a short the rip, so to speak. So that's that new trend there. Got to watch that. Got to watch that. On the weekly here. So opportunity here to short the rip. So what we do now is, knowing that the trend's in play, we just get rid of that. And what we'll do is we'll put an alert below here. Right. If it starts trading below there, we could say, oh, okay, this opportunity to short the rip there. Ideally, you want more of a rip, though. You'd want a cleaner rip into the. Oh, it is already below. Never mind. You'd want a cleaner rip into the moving average cloud, ideally. So this rip, ran a little short. It's respecting this though. So earnings are today, and it's already kind of crossed below that. So we could see some running to the downside. We'll see what happens with ETN if we want to take this up or down, one way or the other. But yeah, new downtrend for ETN. Not really a big rip though. Kind of want a bigger rip there. If you look historically, the rip that did happen was where's that rip? Okay. Oh, we did even mark the downtrend. We did mark the downtrend. Why do we mark the downtrend? We'll mark it for you guys what I'm looking at. I'm sorry. Mark it. I'll mark it and I'll color it for you. Boom. Why do we want to mark it? Because we want to just kind of tell you, like, this is, moving average across the downside right there on the weekly. And this is what it looks like. So is there any rip? Yeah, there is. Drop, nice rip, nice little setup candle right here. Second setup candle, you're definitely getting follow through. Not definitely, but high probability of getting follow through there. So shout out to it. Nice little rip into the moving average cloud. It's kind of what we want. We more want a rip into the moving average cloud. Didn't even get up there, just you're respecting that resistance level. So shout out to it. Something we can pass on though. But just good to recap and watch. I think that Coca-Cola and Pepsi. Let's see how that played out. Let's probably put that on the Coca-Cola and Pepsi there. Let's scroll out there for that. That's weird. There we go. A lot better. So let's say, for example, you took this Coca-Cola play, nice, going up here with a take a short there, get peekabooed, not too bad. You get peekabooed, and then it goes up and immediately stops you, or it would have been for us if we would choose play. Immediately stopped out there within the next 2 days. That's fine. Would have kept to our rules. Shout out to the rules. We're in a downtrend. Nice peekaboo. Now, the reason why also you can look at this and be like, do I want to take this trade? Is because of the risk to reward, right? Your first sign of danger is this support level right here. So from entry down here to there is like not the best risk to reward as it is. So we still do like to trade support and resistance around here, and that's kind of the best way to define your risk. You can go look at PEP as well. Probably doing the same thing. We'll see. PEP's a little different. PEP really rallied, really rallied into the moving average cloud, and has now, as of 4 days ago, really pushed to the downside and kind of maintained that barcoding right there. So could this one work out? It could. It could work out to the downside. Yeah, earnings coming up, so something you gotta watch. But we'll bypass Pepsi and Coke. I'm not one way or the other about it. I would say you could probably target the lows or at least minimum 3 ATR if you do get this play to the downside. But the crazy part is a little bit different Pepsi and Coke there. But yeah, downside might be in full effect. So with that, guys, thank you so very much for your time and expertise. Thank you guys for you guys tapping in with me, MC Fire. We really like coming and doing these lives. They're a little bit better so that you guys can see what we're doing, why we're doing it, how we're trading, us taking profits, us rolling things, all that good jazz. So how we kind of go about the markets in today's world is simply just following the rules that have been around for a very long time, and following the rules that make the most sense, getting us the best edge, reading about the markets every day, being disciplined, really just being disciplined. And don't really give in too much fear. There's a lot of fear pushing around in the wider news too. And when I look around, I'm like, everything I think is going to be all right. Take a page out of Bob Marley's book, in that every little thing is going to be all right. It's not the end of the world what's going on. You've had good presidents, you've had bad presidents, got good administrations, you've had bad administrations. You also, we've been in depressions, recessions. We just came out of COVID. So what's your plan, right? Even if things get kind of worse, I would say bend don't break for sure. And keep that in mind. Keep tapping into the channel, keep learning, keep reading, keep growing. If you can keep adding skills to your belt, you might need those skills later. Like I said, in a recessionary environment, the thing that's really in jeopardy is jobs. So one of the things you notice when you watch the Fed chair meeting is his job is to keep unemployment at a good rate and then keep prices down, right? He doesn't want to cause an inflation, right? Your your panel of news hosts kept asking him about markets and markets as regards to the stock market and what does he think about China. He's going to tell you the same thing. He's like, yeah, we're watching that closely, but until things affect the two things that we're looking at, we don't have to make any decisions. And so I think for his part, Jerome is doing a good job. Inflation is coming down. The job numbers are looking better. They're not the best, but the market, there's going to be a little friction so that the market can rebound. And that friction induces some heat. You're going to take some heat, but eventually, when you find the place, you find the rhythm, then the market, that heat kind of subsides. Everyone gets going. So having the skills to be able to pivot is going to be super important. And if you can develop new skills or take on a new side hustle, that'll cushion your blow as well. But yeah, keep tracking with us, guys. We're doing it. So you guys, this is MC Fire. Love you guys. You have a wonderful Friday going into the weekend. Please try to relax, enjoy yourself. Us as traders, we love Mondays, but don't forget about the weekend, guys. They're important for rest, relaxation. You guys have a great day. Nice chatting with you.